All right, it's Monday. In this video, we're going to go over the Canadian CPI data that just came out and also some things going on with Japan. Happens every so often. We have to refresh everyone's memory. First things first, CPI came in at 2.2, which is below September's 2.4. Now, what was the main culprit of this? It's always oil. Focus on oil prices, you get a good idea where inflation is going to go. I've been mentioning that for months. That's why we talk about it all the time. Now, is 2.2 a good number? Well, it depends. Well, when your food inflation is over 3 and your shelter inflation is over 2, your main things that you need to live, someplace to live and food to eat. I made that reference of the Loblaw CEO talking about how food demand is resilient. Well, yeah, grocery demands are going to be resilient because people need to eat. This takes away a lot of people's cash flow into their basic necessities. And as we go into next year, which is going to be rougher than this year, by the way, with the unemployment data and also these prices still being high, it's going to be a struggling economy in Canada. Now, let's take a look at what's going on in Japan. Speaking of struggling economies, Japan is struggling and they're proposing a massive stimulus package, which is causing their bond yields to go up as they're anticipating inflation because of that. And growth expectations of inflation. So their yields are going up. Now, why is this a bad thing? Global investors do what's called the yen carry trade. Japan has had historically low interest rates my entire 40 years of being on this earth, 41 now, 42 soon. And people, what they do is they borrow money from Japanese banks, convert it to US dollars, and then invest that money, pocket the spread there. And when those rates go up or the value of the yen goes up, that makes it more difficult for those investments to be viable because that spread shrinks every time. So that's why global investors always focus on what's going on with Japan, because if the yen carry trade starts to unwind, you have a lot more problems when it comes to things on our side of the pond, like hedge funds and all that, who are heavily invested in this kind of thing. They're going to have some problems. So something to look out for. Not great. I'm going to say this right now, 2026 is going to be a rough year. It's shaping up to be a rough year. There's a lot of other things that are going on. We're going to start mentioning more of that this week, but I would prepare for next year to be a little bit rougher than this year.